Well, of course, you saw the interest rate decision just 20 minutes ago now. The Monetary Policy Committee of the Reserve Bank deciding to keep interest rates on hold. Historic lows, 3.5%. Let's speak now to the head of investment advice at Liberty, Daphne Rampersad. Daphne, good afternoon to you. I suppose, like everyone else, you're not at all surprised by this decision. It was widely expected.
Yes, good afternoon, Stephen, and good afternoon to your viewers. I think it was fairly anticipated that the governor had very little choice in leaving it unchanged. I mean, there was a small chance he was going to decrease it because of the massive rate cuts we've had since March 2020. And I think coupled with the inflation rate as of Feb this year being 2.9% year on year, very little chance of that. And similarly, very little chance of him increasing it due to the fact that we need to stimulate the economy and growth. So I think, yes, widely expected.
So, I mean, it does mean now we've had almost a full year of rates at these lows. For many people, they've been able to pay back debt if they've had an income coming in. Many people have seen their income cut. But this is still having a big impact on households, that debt is so cheap.
Yeah, so I think this does have a reprieve for consumers, especially those that are over-indebted. So both from a household as well as a business perspective. Also, if you think about it, the low cost of borrowing, that's very
Yeah, all right. We are battling to hear you there, Daphne. I'm not sure why. The Reserve Bank are keeping interest rates on hold. It seems to sound wanting to keep us on pause. Not quite sure why. All right, we're going to sort that out and come back to that particular problem. Now, of course, interest rates are going to be one of the main stories of the afternoon. There are certainly other developments today. You'll know that the Constitutional Court has been hearing the argument from the Zondo Commission about whether or not former President Jacob Zuma was in contempt for appearing in court. We'll talk about that in a few moments' time. Developments in the... Okay, we'll go back to Daphne Rampersad now from Liberty on this interest rate decision. Daphne, sorry about that. Good afternoon to you once again. I was making the point that we've had interest rates on at historic lows for a year now, and this must be having a big impact on people, and the impact could continue to be felt for some time.
Yeah, so from a consumer perspective, Stephen, I think it was welcome to leave rates unchanged. It was very welcome, especially for those consumers that are over-indebted and businesses as well. But similarly, if you're looking at the property market and consumers looking at the low cost of borrowing, it's an excellent opportunity for them to get into the market. Also, from a pensioners' perspective, if you think about the rate cuts since March 2020, this would have impacted them by a third of their interest rate savings actually depleted. So the fact that it's unchanged brings some sort of stability to them.
Talk about that, because there's an argument around inequality and low interest rates, particularly when they came down as quickly as they did a year ago and then have stayed there for so long. It means that people who've been saving, maybe for an education, maybe for their retirement or whichever, have actually lost out. I mean, that's a problem. A lot of people celebrate when interest rates are this low, but a lot of people suffer as well.
Yeah, so it definitely impacts, because remember, even though the cost of borrowing is low, from that perspective, it is quite attractive. But from a market perspective, you're going to see subdued returns. And hence, planning is imperative. So you have to look at your total wealth circle and actually see if there's a great time to get in. Because remember, you invest and you save for the longer term, and you can't just purchase a house and make that over such a short term, or make that decision over the short term. And that's why it's important to take this rate in context. I mean, even though there is a reprieve, you have to take that in conjunction with education, which is still much higher than the 2.9% we're seeing at the moment. Inflation overall, as well as food inflation. So for the average South African consumer, it's sitting at 5.2%. And then if you think about the electricity tariff woes that are still to come, as well as the steadily increasing oil price, all of this needs to be taken in context and not just look at a rate change and the cost of borrowing or cost of investing.
So where's the best place to invest at the moment? I mean, are the people who are buying houses doing the right thing?
So look, the property market is fairly flat and subdued. If you're a first-time buyer, I think it's a great opportunity. But if you're a seasoned investor or an investor that wants to see long-term growth, you should be looking at the markets, particularly offshore, as well as your South African market, and have a more diversified, balanced approach. So unit trusts, lists, endowment, those sort of investments that provide you long-term growth with a balanced portfolio.
Daphne Rampersad, thanks very much indeed, Head of Investment Advice at Liberty. I do appreciate the time. All right, so the Reserve Bank keeping interest rates on hold. That announcement from their Monetary Policy Committee today.